Aloha folks, thank you so much for checking out this video. If you're new to the channel, my name is Mark, Mr. Dividend Investor. In this video, I want to show you that all you need is just three solid companies, three solid dividend companies to build that dividend portfolio that will pay you monthly. So if you like this video, please give it a thumbs up. It helps the channel grow. If you haven't done so, please hit that subscribe button. Don't forget to hit the notification bell so you don't miss out on the videos that I put out. With that said, just wanted to say thank you so much for all your support. Let's take a look at these three companies so that you can start building your dividend portfolio. But don't forget, this is not a financial advice. This is just me sharing. Let's take a look at these three companies. First on the list is Leggett and Platt. The ticker symbol is LEG. For those of you that are unaware of this one, it is a manufacturer that designs and produces various components and products that can be found in homes and automobiles. So they have different businesses as in bedding, specialized products, furniture, flooring, and textile products. So as you can see, if you want to learn more about it, go check out their website. You can see many different components of their business. Now, if we look at Seeking Alpha, you can see one of the things that I always like to look at is their 10-year growth. As you can see in the chart, you can see 10-year, it's about 125%. For the past 5 years, it has gone down to -6%, but 10 years growth of 125% is really awesome. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they have a 70, which is safe. Now their dividend yield is 3.42. The market cap for this one is $6 billion. Now looking down to the key metrics, you can see for this company, the payout ratio is going to be 57. One of the things I really like about this company is the dividend growth. As you can see, for the last 20 years, it's up 7%, which is average. The last 5 years, it's up 5%, which is average. Now, if you look at the chart, you can see from 2002 to 2020, you can see a great upward trend. Now, this is what I really like about it. It's on a dividend growth streak of 49 years consecutively, and more importantly, uninterrupted dividend streak of 49 years without a reduction. Now, for your payout schedule, you're going to be paying out quarterly in the months of January, April, July, and October. Now I want you to focus on this one. I'm going to show you that by investing in this as well as the other two, you create a portfolio that pays you from January to December. So stay till the end and I'll show you how that thing works out. So your annual payout is $1.68 per share. Remember, your ex-dividend is September 14, which is 14 days away at the time of this video. Then you get your payout date of October 15. Now, if we go to Yahoo Finance, you can see onto the earnings. You can see the past 4 earnings has been a beat. Looking at the financials, you can see pretty good for the past 4 quarters. You can see revenue of $4 billion with the earnings of 247 million. Now going down to the recommended trends, you can see kind of like a mixture in August of a hold, a buy, and a strong buy. Their rating is between a buy and a hold. Now you can see the average is 57. Currently at the time of this video is 49. So it is in my opinion a bargain to buy this stock. Now if we look at the top institutional holdings, you can see Vanguard on June 29 bought about 14 million. You got BlackRock about 10 million. State Street bought about 11 million. You can see they've been buying a lot of this company. Now, if we look at tip ranks, their price target is $51 with a 3% upside. Their 12-month forecast is at the 51 with the lowest price and the average price, and their rating is a hold. It's just by one, just hold. Yeah. Now, if we look at bar chart, based on their price target, they have a high of 60, the mean of 55, and the low of 51, with the current holdings of hold based on 3. So you can see 2 holds and 1 moderate buy. So that's for Leggett and Platt. Now let's take a look at the next one, which is VF Corp, with ticker symbol is VFC. This is a company that has a pretty much, you know it, apparel and footwear company. One of their most iconic brand is Vans. So, and then you have Dickies, and then some other ones in here. So now if we look at Seeking Alpha, you can see 10 years, 162%. Now, if we look at Simply Safe Dividend, based on their dividend safety score, they rate it as an 80, which is safe. The dividend yield is 2.55. The market cap is 30 billion. Going through the key metrics, you can see payout ratio is about 97. Now, if we look at the dividend growth, so if you invested on this company 20 years ago, you would have been up 11% per year, which is fast. Even if you did it 5 years ago, it would have been up 5% per year, which is average. Now, looking at the chart, 2002 to 2020, you can see again upward trend, which is what I really like seeing. Dividend growth streak pretty much the same, 49 years of consecutive increases, and more importantly, uninterrupted dividend streak of 49 years without a reduction. Now, the payout schedule, you can see quarterly in terms of March, June, September, and December, with the annual payout of $1.96. Now, if we look at Yahoo Finance, you can see based on their earnings, they did miss quarter 1. So we'll see how they go in quarter 2, but they beat at 3 out of the 4. Financials, you can see a little bit down in 2021, but that is expected given our current situation. But they did revenue about 9 billion and the earnings is 407. And then now looking at the trend, you can see on August, it's a mixture of a hold, a buy, and a strong buy, with the rating of between a buy and a hold. Now, currently the price target is in the high 96, with the current at the time of this video, which is 76. So again, in the discount, in my opinion. Now, if we look at the top institutional holdings, you can see Vanguard bought about 28 million, as well as PNC Financial Service bought about 78 million on June 29, 2021. Now, if we look at tip ranks at the time of this video, it was $76. Their price target is at 94. Now, their 12-month forecast for this stock rated as a high of 106, the average of 94, and the low of 79, with a moderate buy based on 10. You got like 7 buy, 1 hold, and 2 sell. Now, looking at bar chart, you can see their price target is 111, mean is 96, and the low is 80, with the analysis rating currently of strong buy. You can see 3 months is pretty much the same, but this one is based on 14 analysis. Now, breaking it down, you can see 1 moderate buy, 1 hold, 1 moderate buy. Oh, sorry about that. And then 11 strong buy. So pretty good analysis, and I think this is one stock that I definitely like, that you definitely want to check out. Last on the list, we got Verizon. Ticker symbol is VZ. Pretty much a lot of you probably have this as your phone internet provider, telecommunication company. Now, if we look at Yahoo Finance, you can see based on the earnings, you can see 4 beats the past quarters. Annual revenue has been really solid. It's been steady. You can see from the chart. Revenue is 128 billion. Earnings is 17 billion. Now, if you look at top institutional holdings, you can see Vanguard has bought 322 million. BlackRock has bought 296 million. And then you got State Street Corporation's 164. You can see they've been buying a whole bunch on June 29th, a lot of it. Now, we look at tip ranks. Their price target is $61 with 12% upside. 12-month forecast rated as a high as 68, 61 is the average, and 50 is the low. Moderate buy is their rating, 5 buy, 4 holds, and 1 sell. Now, if we look at seeking alpha, the 10-year chart, you can see 50%. Now, if you look at the 5 years, only 4%. One of the things I really like about this company, if you look at Simply Safe Dividend, you can see dividend safety score of 87, which is very safe. Dividend yield is 4.58. And then if we look down to the key metrics, you can see payout ratio is about 49. With the dividend growth, it is very slow the past couple of years. However, again, look at that chart. Pretty steady upward trend. Dividend growth for the past 14 years. Uninterrupted for 30 plus years without a reduction. Your schedule would be quarterly, February, May, August, and November, with the annual payout of $2.51 per share. Now if we look more into it, so you can see just buying these 3 stocks, starting off, if you want to start your dividend portfolio, you just buy 1 stock. You will, at the time of this video, it will be $181. If you buy currently, at the time, LEG was 49, VFC was 77, and Verizon 55. So that is one way to start it. Again, this is not financial advice. This is just me showing that you can start it off with just using just these 3, and then you slowly build your positions as you go. Now, if you look at the dividend payments, you can see LEG will pay you in January, April, July, and October. VF Corporations will pay you in March, June, September, and December. And then Verizon will pay you at February, May, August, and November. So if you can see, you got January, February, March, April, May, June, July, September, August, September, October, November, and December. So just using these 3 companies, you've built your portfolio and have a company that pays you from January all the way to December. So hope you like this video. Please give it a thumbs up. If you haven't done so, please subscribe, hit that notification bell. As always, please remember, this is not financial advice. This is just me sharing. Thank you so much for watching, guys. Stay cool, keep investing, and I'll catch you guys in the next video, all right? Take care. Aloha.